Take a look at shares of Target soaring nearly 15% after reporting a blowout quarter. The company crushing earnings expectations and raising guidance in a big way. Target has been hitting the mark all year long. The stock is now up more than 83%. It's added nearly $30 billion in market cap, and it's sitting at fresh all-time highs. But has it come too far too fast? Target started the year, get this, with a forward multiple of 11 times earnings. It's now at more than 18 times. So is Target getting too pricey to touch, or is the valuation fair? And I feel like we've been having this conversation repeatedly with various stocks in the market that are the winning stocks. They perform and they go even higher. And you have to ask this question to yourself. Is that valuation still justified?
Yeah, well, Pete can wax poetic on this because he's been talking about it for a while. But one of the things, I know we've said it for months, and, I can hear myself saying, if you love Walmart at 23, you have to love Target at 13, at 15, at 16. And now here we are with probably a market multiple. So to answer your question, look, I can understand why you'd be inclined to take money off the table given a run, but I still think there's more room in terms of valuation. And you look at this quarter quickly, gross margins crushed it. Operating margins were 5.4%, much better than the street was looking at. A year ago, 4.6%. And inventories for this quarter were down 8% year over year. That means basically that, in my opinion, margins will be better next quarter. So although the stock has had a huge run, Walmart at 23, maybe Target doesn't deserve that. But in my opinion, certainly deserves 20, and that gets you to 135-ish.
Karen, what's your take?
Yeah, again, we get to that, the market multiple beginning of the year, way too cheap for so many things. But they have executed so solidly. I mean, what they reported today, it was like a pinball of just hitting great numbers, whether it's same-store sales, margins, really important. And so they deserve to have this much higher multiple. Should it be a market multiple? To me, it's better than a market stock, right? The growth is there. Yeah. The earnings leverage is there. I mean, and the bar was high after Walmart, right? So the bar was high. And you guys might remember Dwight Stones. They jumped over this bar that was already so high.
It's impressive.
Okay.
He's the only high jumper I know.
Well, no, Dick Fosbury, of course, was the other high jumper. He was of the Fosbury flop.
It's the only high jumper I know.
And he was an announcer, did a great job for many years.
Interesting that you know a high jumper off the top of your head.
So he cleared this bar. They did a tremendous job. But I know Pete's but
here's the question, and you touched on it. I mean, should it be worth as much as Walmart? Because we're sort of in that range here. So if you wanted to go to a market multiple, fine, that's a couple turns higher.
Right.
And then from that point, it's a few more turns to Walmart.
I don't think it should be worth as much as Walmart. So, what we're seeing right now is that the consumer is still strong, but I do believe that there are some chinks in the armor. The consumer seems to be slowing a little bit. So I'd much rather be in a company like Walmart that's more of a staple, right? They've got over 50% of their business coming from groceries, which I like when you need to be a little more defensive. But look, kudos to Target. I wish we caught this one. We missed it. The stock's up 80, 90%. They're doing a great job bridging the gap between in-store sales and e-commerce. I mean, they were the first ones to really embrace rather than fight head-to-head with Amazon and allow in-store returns. And what separates them from the Kohl's of the world is people would walk into Kohl's, return their stuff, and walk right back out the door. People are walking into Target, returning their stuff, and they're staying, right? And they're buying stuff, which is good.
Mr. Minnesota, I can't leave you out of this discussion.
No, I've loved this stock for many years now. I think Brian Cornell's been the right guy, right time. And the investments that they have done, this is where I push back on what you were just saying. You said 50% is from grocery. You like that. That's no margin. I mean, what I like about Target is it's only 20% of their revenues. And the rest of their revenues, they're different areas. And the private label brands give them the opportunity to have even better margins. Shipt was an incredible buy, cost them $550 million. Meanwhile, Walmart has spent $18 to $19 billion.
Should it be worth more than Walmart?
Oh, absolutely it should. They have more growth. Absolutely. They have better growth. They're much smaller, so there's a lot more nimbleness. There's a lot of reasons why I think Target should be well ahead of them PE-wise. And that's been the story since not only the beginning of the year, but for the last 2 or 3 years, in my opinion.